So let's start of all look at the situations where we can end up with a property in a trust. And sometimes that's almost accidental. So first of all, we could have a starting point where the trust is set up with a particular property in mind and it is placed into the trust. And normally when that is done, that is normally intended for occupation by a particularly specific beneficiary, which we already have in mind when the settlor creates the trust. And the rule in Crowe and Appleby says there is no occasion of absolutely entitlement on behalf of any of the beneficiaries on the occurrence of any of these deaths and on any of these contingencies other than the final one. And the land as a whole remains in property, it remains in a trust, remains settled property, and any disposal, and this disposal at the end is done entirely by the trustees. The grandchildren aren't involved in the disposal, it's only the trustees. If for any reason it doesn't suit the beneficiary, they no longer want this the trust, they have no need for it, perhaps somebody has come and talked to them about the sharing of the nil rate band and they decide they want to get rid of it. If it ends during the beneficiary's lifetime, then this is a pet, and we have to see whether the 7-year rule applies or not. And we could potentially have taper relief, depending on the size of the trust and if they live more than 3 years.